participating life policy is 8 years. So it doesn't matter if client bought a 10 pay, 20 pay, or a pay to age 100. Client can choose stop paying the premium for good for as short as 8 years. So anytime, for instance, if the client bought a 20 pay and after 10 years, client decide, okay, I don't want to pay this policy anymore. Normally, what we do is do a premium offset, but sometimes premium offset.
I can hear her talking. Her name is Lydia something right there.
Where?
Yes. Can you see my screen? Okay, because I share the screen
I
right
can
now.
see your
She was up
screen
there
for the
a while
term.
ago. I don't know what
Maybe you can go out and come back again.
Okay.
No, not you.
Oh, not me.
We can see yeah, we can see the screen. Yeah.
Okay.
Oh,
Oh, Dawn, right? I think I see you turn on your microphone.
oh, but I had her screen. I had her talking. I lost it. So I
Yeah.
don't know what happened.
Yeah. Okay. First of all, yeah, can you
How do I get the volume?
unmute it?
How do I get the volume?
Can you mute it, right? Okay. Okay. Sorry, Lydia, I make you to answer the question. And for the other people, if you would like to know more, you can contact me. I have some video to show you, okay, about the reduced payout. Okay, so like just email me, and then I'm going to send you some video and some PowerPoint. All right.
Oh, you made
Okay,
a
thank you.
video about reduced payout?
Yeah. No,
Wow.
we do something, right? Okay, anyway, we talk, okay? Yeah. So, Lydia, I
Yes.
think we can start now. Thank
Okay,
you.
thank you. Okay, so good morning, everyone. This is my name is Lydia. If you've came to my Canada Life training last time, just please let me know if you have okay, just let me know whenever you have a question. Okay? So I can take a question in the middle or at the end of the presentation. So today my topic is Canada Life My Term. Well, in the past 6 months, I guess Canada Life has been promoting our term discount, term promotion for T10, or basically for any term plans. So the deadline was March 6th. So March 7th, we actually repriced our term product, and we also add some features of our term product. So because everybody on the screen right now is probably very experienced in the insurance industry and obviously know what term is. So I'm not going to go too much into how term works, but just provide you the features of Canada Life's My Term and what lengths of term product that we have available, and some let's say selling feature or some specialties that we Canada Life My Term offers in the industry and others don't. So this is what I'm going to talk about today. Okay, let me see if it works. Okay, so Canada Life My Term life insurance. So obviously, what is a Canada Life term? So normally in the term markets or in the industry, insurance industry, we always see a T10, T20, or T2, T25, or T30. Those are the most common term product term life product that you see in the industry. But Canada Life, I think it was last year, we actually introduced Canada Life My Term, and our term offers a term length anywhere from 5 years all the way to 50 years. so that you can actually customize any term length to your client instead of just pick and choose. Do you want a T10 or a T20 or T25 or T30, because those are the only term lengths that is available in the market. But with Canada Life, we can basically customize the term lengths according to a client's special needs. So in the new product or the repriced product that we introduced on March the 7th, except that we actually lower the rates for the most popular term lengths or term product we are selling within Canada Life for a certain age. And the other thing that we did was what we called a term conversion with a reset feature, meaning that when you have a term policy and then one day you want to convert it to a permanent life insurance policy with Canada Life, we could actually let you to reset remaining term product as a rider attached to the participating life insurance or universal life insurance that you are converting to. And I'll put this a little bit more detail in the later slides. And also the new term that we did, there was a really long page of the rates that are going down, but this time if I want to put in short, I will say that the biggest price change or the biggest price drop will be the client who's under 50, female or male, and the coverage is over $500,000, especially for T10. For T10, I think for that age group, we dropped the maximum. We actually dropped about 26% of the term price. Okay, and for T20, we dropped quite a bit as well. So I think my understanding is, so we are targeting a client in a younger, between 18 to 50, and with a little bit higher coverage amount, meaning that over 500,000 and up, we have really competitive rates right after the repricing on March the 7th. And also our term, we've been selling our term for a little while now, that when we are renewing our term, instead of a step up and fixing a premium for the next 10 or 20 years, we are actually using a YRT structure. Some people don't like it, and some people think it's pretty cool. So I have heard, I would say 50-50, and for those advisors who sold term, who sold a lot of term in the past, they are not used to this YRT renewing structure. For people who are not in the insurance industry for a long time, they're adapting the change and the new feature. They've seen the values of this YRT structure compared to the old structures, or compared to the structures that everybody else in the industries are using. Okay, so when we're doing a term, a lot of people say, okay, so I don't know how long my term, like I want to buy a T10 or T20. I don't know how you are talking to your client about the term lengths that the client is looking for. And normally the longer the term and the cheaper the policy, right? The cheaper the premium. So it's true for actually you're buying term for any insurance company in Canada. On this page, we did a easy example saying, hey, if you buy a T10, yes, it's cheaper initially, but if you are actually you are 35 right now, and if you actually choose to renew the term product until age 60, you can see that after 10 years, because your rates going up dramatically, but for us, even though it's a YRT, but still after 10 years, the cost of insurance going up and every single year. So the total accumulative premium for that 35 years old and to have a coverage until age 60 will be over 61,000. Well, if you buy a T20 to start with, yes, the initial cost is a little bit higher than a T10, but in the long run, it's cheaper. It's only 44,000. But if you choose the right term, or I wouldn't say choose the right term, it's if you choosing a right term for a client that actually meets your client needs. Right at the first place, let's say client wants to buy a 1 million term just for mortgage protection purpose, and the mortgage amortization rate is 25 years. So it makes sense to get a T25 instead of a T10 to start with. So if you actually provide a T25 quote to the client, actually client take the quote, and the client's not the financial needs or is not changing the next 10 or 20 years, and the total cost of this 1 million term policy only costs this client about 25,000. And yes, it's way more expensive initially than the T20, than the T10, because it's double, right? So T10, it's only $40 a month, while if you do a T25, it's $82 a month. But you have to make sure that a client understand in the long run, if the client is looking for a long run a liability protection, T25 may be a better option versus a T10, even though T10 looks, or T10 is cheaper, or way cheaper to start with than a T25. So this is something that as an insurance advisor, we all know that. But again, 25 years, it's a very, very, very long term. That's my opinion, that clients or our financial situation changes all the time. So it is cheaper to buy a long term, and it's easier for the advisor to sell a long term product. And meaning, once you sold this T25 to the client, then you can move on to the next client, and you don't have to come back to talk to this client and then the next, I don't know, 10, 20 years. But later, I'm going to show you something that I've done. Maybe that it can change your, I wouldn't say change your perspective, maybe can give you some options of what you can do with Canada Life's My Term product and the feature and the conversion options. It might be better to fit your client's needs during the whole lifetime, instead of just selling a T25 for good for 25 years. Okay, so when we talk about term, I guess on top of my mind will be, okay, so which company offers the cheapest rates? I guess I can find a great rate for the client. That's how we provide suggestions to a client, which term that the client should pick, which company they should go, because term is pretty straightforward, especially when they are not looking for conversion opportunity in the future. So for that, I actually would like to giving our advisor a comparison page of what commissions that we are paying out for all our term products. Okay, so this is a commission comparison for those most popular term product that a Canadian advisor are selling in the market. You can see that, well, CL, My Term is Canada Life product. IA, there's a pick a term. RBC, they call it Your Term, and Manulife has a family term, and Sun Life has a Sun Term product. So we just put that as an example that you can see for a T10 product that we offer 40% of FYC, that RBC offer the highest. But in the when you're selling a longer term product, that our commission actually paid, our commission rate is pretty good when you're looking at all the product in the industry. So I'm not saying you should sell the term just based on how much you get paid. What I'm suggesting is that when it comes to offering term options or term product to your clients, there are a few things that we need to look at. First, does the client has, is this a cheap, like, is this a good rate? Is this a good deal for a client? And then second, if let's say this client has, based on client's age and coverage, and a term length that all insurance companies pricing are very similar, maybe $1 difference monthly, or maybe 50 cents difference monthly. The other thing that we can think about is the conversion opportunity in the future, right? So the conversion opportunity in the future, client might tell you, I don't care about conversion right now. This is not something I'm thinking about, but you never know down to the road. So when client actually thinking about conversion, maybe this is something that you can put in your mind among all those companies, which company has better or more options when it comes to conversions. And also, and third, that the commission may not be a too bad of idea for you to think of. For instance, if you're selling a T15 to a client because your client needs a T15 product, and when the price is very similar across all the insurance company, and then you look at the commission schedule that we're paying actually 50% of the premium, which is the highest in the industry. So this may not be a bad idea to actually propose K&N Life's term amount instead of other insurance company. Also, we have pretty good conversion opportunity in the future as well. Okay, so that's just, we all know, like me personally, I think that clients always at first, but when the reason why I put this commission schedule out there is that a lot of people, they don't know. I have advisors, they are so used to selling a Manulife family term, and their advisors so used to sell I pick a term because they think it is a great product. I'm not saying any of those products are not good. I'm just saying that when people are so used to do something, I would like to use that to say, oh, I did not know, because before we only have T10, T20, and T30 products. So it's easier for advisors just to compare a T10, T20, or T30. But when you look at I put this commission schedule side to side, and may give you a better idea when you're doing a T20 instance, for instance. So every insurance company kept at 50%, but us, if you're selling any term length product that is over 20 years, you get 55% for FYC. Okay, so this is something just for you in case you're interested. Okay, so those are just examples that in the future slides, I actually gonna put a lot of examples and a scenario that you can use, and those are, some of them are actually real case that the K&N Life My Term length, or the term that we offer, actually gave clients or put K&N Life My Term in advantage. So these are just a couple of the real case example that we did last year. Okay, so for instance, this male non-smoker, 43, and he is a business owner, and he wants to over 100 million of coverage, but for a lot of reasons, for a liability protection, right? So for more, not just for business reason, he doesn't want to have a 10-year term product. He doesn't need a 20-year term product for that amount. All he needs is 5 years, because his loan or his long term is just 5 years. That's all he needs, right? So that's when K&N Life My Term come in place, saying, hey, you can pick any term length or you want, right? Not just a T20 and T10 or T25 or T15. So this is a real case example. And the next one is, again, it's a 5 million term coverage, and this client wants it for 40 years. And, you're saying, okay, why don't you just buy a permanent? Well, some people, to be honest with you, some people don't believe a life insurance, but they do understand that they have liabilities need to cover. So all they want is the cheapest product they can find, or the right product they can find, just to cover the liability. Okay, so this will be a perfect, so you can't really find a T40 in the market except for from K&N Life, right? So this is another perfect example. And also, and there we sold a case for a female 35 and 1.5 million coverage for a term 50. Right, for term 50, they just want it, and they think it's pretty good, and they also think that in the long run there might be conversion opportunities, and they don't want to do a T10 or T20 or T30 because they know that they want to have a long-term coverage. They want to keep the cumulative premium as low as possible. Okay, so those are just some examples, and then you could that we actually did with Canada Life My Term, and also that we like there are slides there. I don't know if it's going to be helpful for advisors, but just give you some ideas about what Canada Life Term can do for your client. Normally we'll just say, okay, so you want a T10, T12, T11, and do you have a budget, or do you have a coverage amount in your mind? Or when we do their needs analysis, right? So we say, okay, so you probably need 750,000 coverage for 15 years or for 13 years. And but then client has a budget, right? And then when you run all the illustration, just saying, okay, so the client's budget, it was just way too low. And what do I do? So with Canada Life's illustration software, we actually give you 3 options. One, you solve by premium, meaning that you put a term length, T12, T13, and T16, and then you gave me a coverage, right? You gave me a coverage, saying I want 150,000 coverage. Then we solve for premium. This is which most insurance company, when you run their software, that's what they do, right? You give me, oh, I want a T10, sure, and how much coverage? 250,000. Then here's your monthly premium, or here's your annual premium. But with Canada Life software, we could do 3 things. One is what I just mentioned, solve for premium. The next, what you could do is solve for the coverage. Okay, so you're saying, okay, I only have $50 a month. Give me an example on the slides as well. So I only have $50 a month, and I need a coverage for 35 years. So you put 50 months as your $50 as your monthly premium that you are willing to put into this policy, and you choose a term as a T35, and they will actually go back to solve how much coverage that you can get, or that with that budget that you have in your mind and the term length that you want. So once you solve this, it gives you $279,174 coverage that your client can get for the term length he wants and for the budget he's looking for. The last one is, okay, so I know that I have a $50 budget, a monthly budget, and I need a $1 million coverage minimum. So tell me, what is a cheaper? How long can I get a term product for? So when we solve it, it tells you, hey, you can buy a T15, right? So instead of buying a T10, and then T20 is too expensive, and the software itself actually can solve it for you. Say, okay, so if you only have $50 and you want to have a $1 million coverage, how long what term length that you can get? It's 15 years. So our software can actually help your client to solve based on whatever their budget or whatever their goal is. So we have 3 solve functions that you can use. When you have time, you can just go to Canada Life illustration software and to play around with it. And also, there are so many examples that we could talk about, we can use according to the client needs. For instance, here the slides tell you, hey, if you're young and you have student loan and these and that, but then you have a pretty promising future, right? So instead of getting a longer term, maybe T5 and with a lower budget to start with is a better idea. Or in the family market, right? So you can do joint to cover your mortgage, and then you can save some money. Then you can buy a permanent insurance just to cover each other. And also for business owners, right? So business owner has different, let's say a target or a different plan, and they probably get a business loan, or they have plans in their mind, and then it's highly unlikely it's going to be a 10-year plan, 20-year your plan. It could be a 7 or 6 or 3 or 5. So Canada Life's term, my term product, can fit your client in any category, in any term length or any needs better than the T10 and T20 or T25 in the market. Okay, so here I'm not gonna spend so much time and to talk about T10 and T20 and the average face amount that we're selling, but this page just give you an idea. Even though we offer T5 all the way to T50, advisors still used to sell T10 and T20, especially that when we run a promotion in the last 6 months, and T10 actually gives you the highest discount. So the trend is that we actually sell a lot of T10, even though I just talk about all the term lengths that you can use. But with the statistic that we have internally, where we are being very competitive, or the client's needs, that you can tell that we actually sell a lot of T10, and the average case size is over 500,000. That is why, in order to target our ideal target market, that we actually lower our rates for clients under 50 years old, and for the coverage that is over 500,000. Okay, so this is something that you probably need to know, is that, like I mentioned before, the term promotion ends March the 6th, and the new term rates is March 7th. Yes, so I got a question here that you sometimes will see a T10 or T6 or T5 or T8. Their premium difference is minimum. So that is why a lot of people do usually sell a T10 for a longer term, but with very similar, or what we call it, a term premium certainty. That's absolutely right. That is why I actually had a slide saying that when client has a term length in mind, what advisors are doing is actually showing a couple of years longer. Let's say the client's looking for a T12. We would actually showing an advisor clients for a T13 or maybe a T15, so that giving a client an idea that, hey, maybe for 50 cents more or $1 more, you can actually have a longer length term, and with minimum price difference. You don't have to pay a lot more just to get a little bit longer term and to have more coverage. Okay, totally agree. Okay, so this slide I want to, for those advisors who sold term or who has sold a lot of term in the past for the promotion, if any policy that was placed, okay, that was put in force between February 24th to March 6th, if your client, okay, if you run an illustration with the new rates, then you saw that the new rates is actually better than the promotion rates, please let us know that we can actually help the client to get the better rates. Okay, but it's only for all those policy that was enforced between February 21st to March 6th. Okay, so let us know if there's anything that we can do to help your client to get a better rate. Okay, but if your client submit application after March 6th, we're meaning starting from March 7th, they don't qualify for the old rates. They don't qualify for the term promotion. It's always going to be the new rates. So since March 7th, and today is March 10th, in the past 3 days, I got more than 10 calls asking for exceptions, saying there's this reason, that reason, they couldn't submit the application before the deadline. But unfortunately, we can't really offer any exception on that. It's for once, the system didn't crash, and secondly, and the promotion has been running for more than 6 months. So it's very highly unlikely we're going to offer an exception for that. And also, I actually, because of that, I run the new illustration versus the old, to compare to the promotion rates. For all those cases I run, and I actually find one rate that is better, even better than the new rates is better than the old rates, even with the promotion, with the discount. It only happened once. That's about 10% of the case that I ran. So it's possible. So I would suggest for those of you who submit application prior to March 6th, and maybe when you have time, because the policy hasn't been settled or still in underwriting, when you have time, please run a new rate to see if the new rates is better than the old promotion rates. We can help you to get that rates for you. Okay, so that's the slides I was talking about. Okay, so when we show client a T5 or a T10 or a T20, okay, normally we would suggest, or most advisors are doing, just like what Michael's doing as well, that, hey, I run a little bit like maybe a couple more years length to see how much extra premium the client needs to pay in order to get a little bit a longer term duration. So for this case, a T20 versus a T20, when the difference is $2.60 monthly, right? And T21 to T22 is $2.72 monthly. So this is something that the client can keep in mind. Okay, this is something that client can keep in mind, saying, hey, okay, should I do a T20 or do I want to do a T22? It's not really like a significant difference, but is that something that client are willing to look at it to just get more flexibility down the road? Okay, so this is something that a lot of advisors are doing. It doesn't matter if the client say, I want a T10. Hey, you can run a T11 or T12, and a lot of time, maybe a T between a T10 or a T12 or 13, you see like $1 difference. And if I the new price, I'm not sure, but with the old pricing, I've actually seen the longer term is cheaper than the shorter term. I've seen that one case. So you never know what's going to happen. It's always a good to try a different term for a little bit, to play with the system a little bit. Sometimes you will be surprised. Sometimes you will be surprised. Like for instance, like I mentioned, I ran the illustration for those advisors who wants to get exception because they missed the deadline. So the client, female 46, and she initially only wants to do a 200,000 coverage T10. Okay, so after the discount was like $185. And then when I say, okay, too bad, there's no way I can make exception for you, but you know what? You never know. So I ran the new illustration and look at it for 200,000 coverage. For the same client, female non-smoker 46, the new rates is actually over $300. So if I'm not mistaken, it's $352. So it's a crazy, like a big jump, right? So advisor was really sad, and she's like, I'm new, I don't know what to do. It just made her look so bad. So you know what I did? I actually did. I say, okay, so that's like a crazy jump. So I accidentally, it wasn't doing that on purpose, but I tried different ways. So I tried 250,000, because normally when the coverage is higher, the rates are higher or maybe the same. So when I try for this client, I put 250,000 instead of 200,000. Guess what happened? The rates goes down to $183. Sorry, the 200,000 was 252. Yes. So when I do the 250,000 instead of 200,000, guess what? Rates went down to $183. It's actually cheaper than the after discount for the old price, and you get 50,000 more coverage. So it only happened once. I'm just trying to say that it's always you will be surprised what you can find with those new product and then new rates. Okay, so always play around with it. And those are the only let's say advice, or I wouldn't say only, those are some advice that I could offer, because this is still new, even for me, right? So the new price only came out on Monday. So I'm still playing around with it, but this is something that I found out with same client, same term lengths, but higher coverage gives you a lower premium. Sometimes that happens. Because remember what I said, that we lower rates significantly for any coverage that is over 500,000 and the client that is under 50 years old. So those are the things that you can play around with it when you have a client and you want to provide client the best deal that you possibly could. Okay, those term conversion that I don't have to say no more about it, just no medical required, just a conversion paper. It's easy and it's straightforward, and I guess everybody is so familiar with it. So here is something that the new term feature is talking about, what we call a reset feature. We call it a reset feature. How it works, there's a lot of wording on that. So how it works is that for any Canada Life term that is sold January 1st, 2005 and later, if they want to convert, okay, they want to convert that term into a permanent policy. It could be a UL, it could be a participating life insurance policy. What we offer is that if you convert that policy, for instance, you have a $1 million coverage, a term coverage, you want to convert 400,000 into a par or into a UL, and the original term is a T10, for instance, or a T20. Now you want to convert that 1,400,000 into a UL, and then and what we could offer you is let you to convert that 600,000 remaining term into a term rider with a current age, and your term, we were resetting that term price, and then you can get a term 20 product as a rider. So that what we call a reset feature. So instead of you keeping the remaining 600,000 T20, which might be renewing in the next 3 or 5 years, we could actually give you a 600,000 and T20 as a rider of the permanent product that you are converting to. It's a T20. Just without medical underwriting. And so instead of having, you need to renew the product in the next 3 or 5 years, now you have a new T20 that you don't have to worry about to convert it in the next 20 years as a term rider. It might sound confusing in the first, but feel free to ask me a question or give me a scenario. I'll try my best to help you to understand what this term reset, how this term reset works. So with that, you don't, because it's still a $1 million coverage, so there's no underwriting. So basically, I would say that yes, you could do a conversion. Now you have more options to convert the whole amount, but not into a permanent life insurance policy, but to leave whatever that is left over as a term rider without underwriting, and give you longer term protections with lower rates, so without medical underwriting. Hopefully that can help you a little bit. Yes, I got a question. Yes, you can put a microphone on to ask me question regarding this term conversion reset.
Hi, Lydia, this is Mike here. Just on my question there.
Yes.
So I have a case here that basically, as of essentially the end of this month, I have a client, younger female, and she bought it. She has a T10 policy that was issued back in 2012. Again, renewing coming up right away, and sending April 1st. And she was non-smoker at the time, and she's actually a smoker now. You don't see many people who go from non-smoker to smoker later in their 30s, but she became a smoker.
Yeah, well, it happens. They just don't talk about it.
Right, exactly. So the other part too is she also has some pending medical tests going on. I don't think anything of significance, but I know Canada Life won't issue a new policy, a new, say, term policy to replace her existing term coming for renewal because of the pending
Right.
medical evidence. So
Yeah.
what we actually done as a long-term and kind of call it a stopgap or short-term solution of her existing 500K of T10, we converted 100,000 to some level UL
Right.
non-smoker because it's non-smoker the policy.
Yeah.
And the other 400,000 of remaining coverage from her term, because we're moving 100 grand to convert, we're converting the other 400 as a short-term solution to some UL YRT.
Right.
Because again,
Because
this
it's
is
cheaper.
right. Okay. And
Right
because it's
now.
non-smoker.
Yeah.
So in this case, again, we're converting 500 of T10 up for renewal to 100 of level UL, the other 400 to YRT,
Yeah.
all non-smoker because she is smoker.
Right.
Could the other 400, just so what are my options instead of doing this YRT conversion? Could this help my client on a policy that was issued back in 2012?
Okay, so 2012, it's 10 years. Okay, so
Right.
based on what you have just described, if we want to see, because you really need to run the illustration to see if it actually works out, is that because the client has a 500,000 coverage right now. So if
Yeah.
you want to use this term reset feature,
Yeah.
look at the wording says that at least 50% of the original coverage needs to be converted into a permanent coverage. So for your
Oh,
case,
okay.
so it has to be instead of 100,000 that she has to convert 200,000 coverage into a UL,
Okay.
right? Leave that 300,000 as a UL term rider. So the original policy was a T10 or T20?
T10, that's why that's for
T10.
renewal.
Okay, so now, so you can try to run the illustration to compare. So instead of doing 100,000 UL and plus a 400,000 UL YT, you could try to do a 200,000 UL, I don't know, level, plus a 300,000 T20 as a rider.
So the option, because I haven't done it, I don't do many riders, I do separate policies mostly.
Right.
But on riders still on a UL or even par, you can only
Term.
choose like a term rider on UL or par, you can only do T10 or T20. There isn't my term, right?
Right. So
Yeah.
for a term rider, the only option, I think for permanent life, there's only T10 or T20. For UL, there's T10, T20, and T30.
Oh, okay. So again, on this, because she has 500K of coverage coming up for renewal, we have to convert it minimum 40%, which is the 200K of say level you're referring, and the remaining 300K, instead of doing this whole YRT kind of short-term solution here, I could convert it to a UL T20 rider to basically be attached to her for a $200,000 policy.
Yes.
Okay.
So you can choose between a T20 or T30.
Okay. Or
yes,
I don't
you
need
can
that
try it out to see how it works. You can comparing the rates.
Okay, but I couldn't convert her existing, say the remaining 300. I could not convert that to a T10 as a rider, only T20 or 30.
Yeah.
Okay.
So this is something I'm going to actually in the next couple slide, I'm going to tell or make it clear about Canada Life's term and what their term conversion features that you could use for your client. If her T10, or if you're talking to her, or if she's asking you about her options for her T10, if she's talking to you 3 years earlier, she has the option to convert it into a T20.
Yeah, I always call it a term exchange, or
yes, we call it
terminology?
Term-to-term conversion.
Term to term. Okay, all right. I call it exchange, but okay, yeah,
yes.
I do know about the 7-year rule.
Yes.
Okay.
Okay.
Thank you very much for your time.
Yeah, no problem. So yes, so I'm going to answer 2 questions. One, yes, when we do this term conversion or this reset, it's always going to be a 10 age, not original age. There's something what we call original conversion that I'm going to address that in the next 2 slides as well. So the next question, can term life can convert into a permanent life insurance? Yes. So any Canada Life term life policy can convert it into a UL, a participating life insurance policy, whenever they want. Okay, so there's
before
age 70. Before age 70, yes. Thank you, Amy. Okay, so So this is the reset feature that we currently offering for all the Canada Life term policy that is issued January 1st to 2005 and later. This is something that only Canada Life has and no any other insurance company has. We call it 12 months exchange. So this is actually giving client more time to think about, and then things could change within 12 months. Especially nowadays, we don't know what's going to happen. Not even next month, we don't know what's going to happen tomorrow. That's that's the word that I always like to use. So 12 months exchange for any Canada Life participating life insurance policy owner and term life policy owner. If the product was bought or was settled or really looking at their policy date. Okay, so if the policy was or the policy date within the 12 months of the first policy anniversary, if client decide, hey, you know what, I bought a T10, so regret it, I wish I bought a T20, I wish I bought a T30 because my friends bought it and these and that. So can we, what can we do, right? So now within the first 12 months, you cannot convert. But what we could offer is within the first 12 months, or what we call the first policy anniversary, within the first policy anniversary date, that we actually let you to change it to a different term product. So this is, I refer that as just giving client a peace of mind. When they make a decision, when they give you the check, when they settle this policy, they still have time to decide. Is T7 the right plan for me? Is T20 the right plan for me? Is T13 the right plan for me? They still have time to think. Okay, if they ever want to change a plan, we would exchange a term plan for them. Same with participating life insurance. Some people bought Wealth Achiever. I think it's too, I don't know. Now I changed my mind. I don't want a Wealth Achiever. I want a Estate Achiever. Or I bought a Estate Achiever, 10 pay. Now I think it's too much. I want to, the premium is too much. I don't want to pay that much premium. I want to do a 20 pay. Can you do that? Yes, you can. So within the first 12 months, as long as the coverage does not change, that we would offer you to exchange to a different plan. Okay, so this is something only Canada Life has. No any other insurance company offer. Any other insurance company, if your policy is enforced, let's say if you bought a T20, 6 months down the road, you're saying, I don't need a T20. I should just need a T10. Why? Because I sold my house. I don't have that much liability, these and that. Now, can I change my T20 to a T10? Yes, you can, but it will be a replacement, right? So you're essentially getting a new policy to replace the old T20 policy. But with the Canada Life, yes, you can. You can. We actually let you change your T20 plan to a T10 plan, and any premium difference, because we all know that T20 is more expensive than the T10, any price difference, we will refund you the check. Okay, we will refund you the check. So this is something only Canada Life has that no one else in the industry offer. So that's why and you can say, oh, there's nothing we can talk about for term. Yes, there is. Once you buy term, actually there are a lot of possibilities down the road. Okay, so this is one thing that Canada Life offers, no one else offers. The second that only Canada Life offers that no one else in this industry offer, what we call as a original age conversion. Okay, so an advisor just asked, oh, is this a teenage conversion or a original age conversion? So for a standard term-to-term conversion, term to permanent life insurance conversion, it's always a 10 age, right? So, but with Canada Life, we actually offer a standalone term policy holder an option, what we call a original age conversion. So how it does is that we will require a minimum face amount of 500,000. Okay, so how does that work? Let's say you're 30 right now. You bought a T50. You bought a 500 T10, 500,000 coverage T10. Why? It's cheaper, right? So at age 35, you're saying, okay, so my financial situation is getting much better. You know what? I want to convert that T10, 500,000 T10 into a participating life insurance policy. So normally when we do conversion, what's going to happen is now client is 35 years old. Yes, the client does not need to do any medical underwriting. There's no need to go through medicals. There's not even a medical question going to be asked. You can convert it to a participating life insurance policy. And how you're going to calculate the premium? It's 50,000 coverage with the age 35, male, non-smoker, right? That's how you calculate the premium. But with original age conversion, so what you do is we actually let you convert that 500,000 coverage, a T10 coverage, into a participating life insurance policy with age 30. Okay, so if I stop right here, everybody will say, oh, that's too good to be true. How does that work, right? So how that works is that now think that way, that just assume that Canada Life actually lent you money in the past 5 years, let you to buy a participating life insurance. Okay, so how this works is that now you're at age 35. I'm giving you a participating life insurance policy dated 5 years ago when you were 30 years old. So what you need to pay is the 5 years of participating policy premium. Let's say if the premium is 10,000 a year, now you need to pay 10,000 times 5. That's the minimum, right? So you got 50,000 that par premium that you have to pay it off at the spot when you are converting that T10 policy into a par policy. And also you need to pay interest on the premium. What will be the interest rate? It's the policy loan interest rate. That is why I say just consider that, hey, Canada Life actually lent you the money to buy a par policy. So your extra cost will be the policy loan cost. Yes, to answer Michael's question is that the original age conversion is only available for par, not for UL. Okay, only available for par, not for UL. So this is something only Canada Life offers, not any other insurance company offers in Canada. Okay, so you might find it confusing to start with, but if you want to know details or you have a case that you want to talk about, you can reach out to me or reach out to Amy. We will be able to have all the answers for you. Especially for that, I would say a lot of time that if it's already an enforced term policy, that we need to look at a case by case. Okay, so for that, it's the same thing as a term to term conversion. Everything has to be done within the first 7 years. Okay, so if you bought a term today and within the next 7 years, you could have the option to convert it into another term, or you can have the option convert it to a participating life insurance policy with today's age, or after 7 years, the only option for you to do or for you to convert into your current term policy is convert it to a UL or a par policy, if you want it, with a term reset feature as well. Okay, so within the first 7 years, that you have a lot of options. You can do a term to term conversion, you can do original age conversion, or you can convert it into a permanent life insurance policy with a 10 age. Okay, so within the first 7 years, you have a lot of options. Okay, so this is what we only Canada Life offers. We call original age conversion. Okay, and also, okay, well, I guess I'm done with the slides. If you need needs analysis calculator, Canada Life actually has a website you could use. Like there's a text that you can calculate for you. There's a needs analysis calculator. All you need to do is just click planningtools.ca. It's open to everybody, opens to public. You don't have to, you don't have to have a contract with Canada Life to use that tool. Okay, it's open to everybody. So I've talked a lot about Canada Life's term and the Canada Life term feature. And this is just Simple Protect, that it's a very user-friendly online application that you could use when you submit term life insurance policy. And it's up to 20 million. You can use you can use Simple Protect. So it's basically every of your term client, you can use Simple Protect to submit your application. Okay. So, and last, I want to show you something that I did, and I don't know if it's going to bring value to you or not, but that's something that I've done. Can you see my Excel? Okay, so this is something that I've done yesterday, and it looks weird to start with, but something that I want to kind of share with advisor. I don't know if you find it's useful or not. If you don't think it's useful, just ignore it. If there's something that you find and open your mind a little bit, feel free to use it whenever you want it, however you want it. So now you see that Canada Life has a term-to-term conversion. We have a reset feature for the term product. So this is something that I've done. I was thinking, so what can you do with all those term-to-term conversion, giving you the advantage or help your client to meet their goals if something happened or something changed, and how, as an advisor, could having more follow-up or client meeting after the term policy that you sold to your client, right? So think how many times that we can talk to your clients, and maybe we can, to reassess their financial situation, their needs. We can always think they're more, I wouldn't say they're more policy that you can sell it to your client, and their financial situation change all the time. What we can do to help clients, and what I can do to help advisor, that's my perspective. So this is something what I did. I don't know if you're gonna like it, but here's my idea. Just hear me out. If you think it's completely useless, just ignore it. I will just thank you for your time. So this is what I think. I said, okay, so now Canada Life has a term-to-term conversion, and it has to be done within the first 7 years. So how can I get an app from a client, and it's easy. It's an easy app, especially for a younger client, and they do have liability, and they say, I have no money, right? They have money for cars and house and everything. They just don't have money for insurance policy. I think that's true for any culture. So this is what I did. So I proposed a T7 to a male non-smoker 30, 1 million coverage. Okay, so it only cost him $38.08. Now, Michael mentioned, hey, I run T5 and T10, there's no premium difference. Here you go, that's what I did, right? So you could do a T7 for $38.80 a month, or you could do a T10 for $40.01 a month. So look at the difference. 3 years more protection, but only cost you not even $2 more, not even like $1 more, right? So just $1.20, 21 cents more. So it only costs you $1.21 more, but you get 3 year more coverage. So it does make sense for your client to choose a T10. But my idea is, why would I put a T7? That's a random number? No, the reason why I put T7 is, remember I said it's a term-to-term conversion. You have to do it within the first 7 years, right? So if you bought a T10, a lot of time when you reach out to your client again, or when client reach you again, it's probably close to T10. It's probably close when she or he received next year's premium notice, saying, oh my God, now my premium is $200 a month, not $40 a month. That's mostly what happened for those term clients that we sold in the past, right? So when you buy a T10, it'll be too late, because the only options we have is convert to a permanent. Well, now, yes, a reset maybe, right? But they don't have the option to do term-to-term conversion. So that's why what I put it here is a 2 scenario that you could use, I could sell a client a T7, and then at year 7, the client is going to receive a renewal notice, right? The premium is going to be different. Or you can do, proactive a little bit and talk to your client saying, hey, not 7 years. What do you want to do with your term, right? So you could convert it into a T17. Now the client's 37 years old. He can convert that T7 to a 17. Remember, when we do term-to-term conversion, we can't just say, oh, I have a T7. Can I convert into a T10? No, you have to convert into a term that is 10 years longer than the original term. Okay, so for a T7, you can convert it into a T17 or T27 or T18, T19, T20. As long as it's 10 years longer than the original term, you could do that. So now client's age 37, right? You can talk to your client saying, hey, here's the option, right? You could do an original age conversion, convert it into a permanent life insurance policy, the full 1 million or 500,000 coverage, but then you have to leave the remaining, because they don't let you do partial conversion for the original age. That's why I said there's a little bits and pieces. If you want to know, if you are interested, let me know. So you could do original age conversion at age 37. Now, most people say, now I'm age 37, I have a huge mortgage, I have kids and these and that. I can't afford participating life insurance policy. Okay, so now at age 37, you could convert this T10 to a T17, right? So how much does that cost you? At age 37, male non-smoker, you're buying a T17, it costs you $60.92 a month. Okay, that for a client who's 7 years older and getting a term that is double the length, more than double the length of the first term, but the premium does not even double. Okay, same coverage. So it's not a bad deal at all, right? Remember, there's no medical evidence, there's no evidence required. It's a guaranteed conversion, right? So now client had the option to convert it to a T17, or if he bought a T10, he can convert it into a T20 for $69.74. Okay, so now this is already, we did one round of term conversion. Now, what I did is, okay, can I do second round of conversion, a term-to-term conversion? Yes. So now 37 plus 7 is 44. Now the client is 44 years old. Okay, now you could talk to your client and say, hey, now it's another 7 years ever since you get this T17 or ever since you get this T20. What's your plan? You want to convert into a permanent with a reset feature, or you think another 10 years like coverage is more than enough, or you want to extend your term a little bit? Okay, at this age, client probably has a better idea. So, okay, so my kid's probably going to go to university and these and that. Is another 10 years of coverage enough? If he thinks, yeah, should be enough, then you can come back later when the T17 is about to renew or the T20 is about to renew. Or if the client's thinking, okay, so now I bought another house. Accidentally, I just had extra kid, well, I wouldn't say extra kid, another kid. It seems like in the next 15 years, I still have a lot of liability. And I don't think I can convert my term policy into a permanent policy anytime soon. Okay, so it is a good idea to have a little bit longer term product or a policy for now, right? So, okay, so for those clients who had a T17, now he can convert this T17 to a T27, right? Remember, 10 years longer. So now he can convert it into a T27. Now he's 44. T27 is give him until 71, right? That's probably long enough. Or T30 give him until 74. Okay, so now this is the third time you're talking to your clients and giving them options, right? Instead of saying, okay, you have to convert it into a permanent, which you might stuck. I don't have that much money to convert into a permanent. Now here's the option, right? You can fix for a longer term, no medical underwriting, doesn't matter what conditions you are at right now, guarantee convert, right? So this is the third time you're talking to a client and giving client another option to basically keep extending his term for a longer term duration without medical underwriting. And if at age 54, okay, why would I put age 54? It's basically, what if the client saying, I'm not converting, nothing happened. I think I have enough term coverage to cover my liability. Okay, so I don't want to convert into a longer term. I'm okay with where I am right now. But at age 54, his term 17 is about to renew, right? So this is when, again, you can talk to a client saying, hey, now your term 17 is about to renew, or in 3 more years, 57, right? You can talk to a client. Now your T20 is about to renew. Okay. Now your option is to convert it to 100%, convert it into a UL or PAR, or you know what? You could actually have a reset option, right? You don't have to convert everything into PAR, or you don't have to convert everything into a UL. You can do reset. So here what I did is for a male non-smoker 54, I converted into a state achiever 20 pay. Basic coverage is 400,000. Remember, it has to be 40% of the permanent policy in order to get a reset term rider, right? So what I did is 400,000 as a basic coverage for a state achiever 20 pay. Dividend option is enhanced, and plus whatever term is coverage left over, I put into a T20 policy. So that total coverage is 1 million by the time of conversion. Okay, so that gives me $1,656.15 a month. Okay, or you could do Wealth Achiever 20 pay, same thing at slightly more expensive, or you could do a UL 20 pay with a T20, whatever is left over as a T20 as a rider. Okay, or you could do UL level pay if you want to, plus a T30 as rider. Okay, however you want it. Okay, so there are a lot of options. And here I put the last line is commission. Why I put it that way? I want you to see, you could just sell this client a T25 in the beginning, right? And paying $70.33 a month. And that year, your commission is $1,118, right? So this is the assumption that I use, okay? If I assume that you override 160, everybody has different override rate. I just use 160 for my commission calculation purpose, okay? So if your overrider is a little bit higher, then you should see a higher number here. Okay, so you could just fix him with a T25, and he's paying $70.33 a month, and you getting paid $1,000, right? And he probably won't, next time you talk to him, he probably won't do too much because he thinks he's pretty much protected for 25 years, right? And next 5 years you talk to him, next 30 years you talk to him, then unless he's getting more liability, you want to get another term. Otherwise, pretty much you don't have a lot of conversion opportunity in the next 20 or 25 years, right? Because client probably saying, oh, I'm covered, right? But look at here, if you sell a T7, I'm not saying you have to, it's just if you do a T7, 37 years, in the next 7 years, you get opportunity to talk to your client. Why? This is something your client has to think, because he needs to make his mind right now if he wants to do a T2 term to term conversion. Otherwise, it'll be too late. So your client will meet you to do another round of needs analysis. Even there's nothing he's doing with his term, he's probably getting a new term, and you know, he had a new kid. You can probably, you know, do another set of financial planning for his family, right? So in 7 years, a lot could change in 7 years. Now, at age 44, it doesn't matter what he did for, if he converted into a T17 or a T20 at age 44, again, you can talk to your client, okay? So if your client did this route, okay? So this, and that, how much commission you can get, right? So it will be this amount plus this amount, and then plus this amount. Okay, so if your client did this, and this, right, and then convert it into this, so how much commission that you can make? Just one plan. You're not selling him anything. Just play around with his one plan that you sold to him when he was 30. Okay, so how much you can get paid? This, and this. Okay, that's just saying I'm not even doing a full conversion yet. Okay, so the idea is 400,000 permanent and 600,000 as a term writer. That's the ballpark of ideas. Okay, so this is something that I think it might help you as, you know, as a thinking process of what can I do with Canada Life's my term, with Canada Life's term policy features that we currently offering. Because I think our term to term conversion is the longest in the industry, and normally other insurance company offer term to term conversion within the first 5 years. We offer within the 5 years. So the way I set up this is actually give you multiple contact point for you to talk to a client, and then your client really have to meet you for his appointment, because it is time for him to think, what does he want to do for his current policy? If he meets you, he will have more options, more ideas. If he's not, then too bad. So this is what I've done. It's all my idea. If you don't like it, that's okay. If you think it might be helpful, and that's great. And then I'm happy that I could actually help. So this is basically the end of my presentation today. Do you have any questions? Or you think my idea is just too ideal? It doesn't happen that way. If you think this is useless, just ignore it.
No. I think this is a brilliant idea, because it gives us a conversation to our client. You know, I love it. You know, and even for the client, you can also explain to them that, oh, you can do the 7-year term, and after 7 years, we can decide for you whether you want to continue a 17 years term, right? Then you can say that even with these two, you know, that for 17 plus 7 is already how many years? It's already 24 years. Then you find out that you don't pay much more, you know, you even pay less. You know, people love it, you know, that 24 years you pay less, but you force the client to do something together with you, you know, because they might have to think about something more, right? So I think that is a great idea that people can split it out. Only initially you don't earn so much, but then you get the conversation with the client, which I like. But Lydia, should we also have that when we present to the client, right? Should I have the T7 and then T17 and the T7025 to show the client, and then tell them that because we do that, you're not paying more. However, you are able to extend it longer in the future.
Yes.
Every time.
Every single time.
Yeah, every single time you can extend another term, another 10-year term. So that is not only you don't pay much, you are able to extend longer without doing another medical, and also can do a conversion as well at that time, right?
Yeah.
So We can also do a original age conversion. Right? Regarding original age conversion, you say that the loan value, for example, I need to pay 50,000 back. That means I am going to pay 50,000 times the loan interest, right?
Yes, policy loan interest rate right now is 4.45.
Okay, total amount times 4.45%, right?
Yes.
So maybe this is such a good deal, because then you can go back 7 years, I think.
Yes, so think about if you are paying, if you choose a 20 pay plan, I think it's because your premium is going to be paid off in 20 years, right? So you do a math, if when you are 37, if your annual premium is 13,000 versus if you are 30, your annual premium for buy a 20 pay product, your annual premium is 10,000. So 10 times 20 is 200,000, and then 13 plus 20 is 260,000. So.
Yeah, I think I like this idea. Only a short term, you earn less, but then you have the opportunity to talk to the client, and also you might do them a better rate because every 7 years you can get another. Let's see, this is a term 27, which is so nice, right? At the same time, they can also change it to, at that time, when you are 25 years later, right? You can also think about getting a whole life policy or universal life, right?
Yes.
I think this is a brilliant idea to make use of all the
features that we have, yes.
Right, and also for the whole life or universal life. When we change to the, let's say the remaining term has to be, let's say I have a terms 27, and now I want to change it to a whole life policy. When I do the term policy, they can only allow me to do term 30, or they allow me to do term 20, but do they allow me to do term 10?
No, because so that's a good question, and I should have mentioned it, is if you are converting that to T27 or T30 and using a reset, the only option for you as a term writer is T30.
I see. You have to.
It has to be the same length or longer.
Well, what if I have a term 35?
Then term 30, because for term writer, there's only few options.
So they will allow me, if I have a term 30, they still allow me to do term 30.
Well, that's a good question. I can confirm it with you, for you.
Yeah.
If you have a T35.
Yeah. Okay. Then it's still very low. I hope I can already get a new device. Can everybody help me? Yeah, I can hear
you clearly, Amy.
Okay. Thank you. I got a slow, like what is that called? A snowball device. My computer is not working that well, but then I get a snowball device. I hope you can add on the volume a little bit. Sorry about that. Okay. Yeah. I think I love this idea. So when we go to talk to the client, because recently I have one guy who do a term 625, that guy, or 30, I can try to get him to do something like that and have more opportunity to talk to him about the future term. Okay. Yeah. It's a short-term, smaller policy, but long-term, bigger opportunity, right?
Yes. Yeah. And think that, you look at it, well, 30, 50, that's 24 years of lifespan. Yes. But if you are in your business in 24 years, think every single year, all you need to do is just talk to your existing client and converting some policy, and that's all.
Yes. It is good. I hope people like it, and so like, is there any other question? I have some question for you. Okay.
I have one question, actually.
Yes.
I had a client recently that he had been a very light smoker. And when they were presented the rates for a 25 years term that they initially wanted, they could not afford it.
Right.
At that time, it did not cross my mind to basically sell them something like a T7 or T10, And the guy was promising himself and his family that he would be quitting smoking. And perhaps with that, he could now afford the coverage. And then down the road, we could have been converting him and don't leave them with no insurance at this point of time. Is that a right understanding of what you are pitching or use case for it?
Yes, yes. That's another idea of saying, hey, you can look at a T25 for this client is $70.33 a month. If you do a T7, it's only $38 a month. It's easier to get a client to sign a $38 a month app versus a $70 an app. And also for your client, once you give him the coverage and it's affordable at this moment, also give him the, I would say, motivation to actually quit smoking, because you can tell him, hey, if you quit smoking in the next 12 months, your rate's going to drop again.
Yeah. Definitely.
Right. So what happened is a lot of time, oh, smoker is too expensive. Wait until when I quit smoking, I'll come back and sign the app. They will never quit smoking.
Yeah.
Right. But now they're actually paying extra just because they're smoking. It might give them a little bit incentive to quit smoking.
Yeah, indeed.
Yes.
Very true. Thank you. Thank you.
Yeah, no problem.
I like it a lot. Thank you very much, Lydia. Okay. And today is a little bit longer.
Yeah.
I don't think anyone expect that we have such a long
I wasn't expecting for a term insurance. Yes.
No, which is excellent. That means we have more idea, that helps Lee markets, and also for Michael, that is something to enlighten him to do the conversion and change it to a term 20, and then later on do another conversion, right?
Yes.
Congratulations. Thank you very much, Lydia.
Thank you, everybody. I already put my contact information on the chat for everybody to see. If you want to reach out to me, my phone number is 647-936-5022. I kind of did a mistake for my first phone number and put on the chat. So just to make it clear. Yes.
Okay. Thank you.
Thank you everybody for your time. Please reach out to me.
Please stay tuned. I just have a short team meeting then. All right.
Okay. Thank you, Amy. Bye.
Yeah, Amy, I need to drop off. I have a client meeting coming up in 5 minutes.
Okay, no problem. No problem.
Thank you.
So today I just want to see if okay, good. I'm happy, Michael, you come early in the morning and join us, and in your province. And now I want to share something with you guys, right? And okay. Oops. What? I close it? No. Okay, I don't think I want to write. Okay, hi. I lost it. Okay, now you get it back. Oh, say where am I? Okay, so I think when we see the client, it's very important that we have to see what type of term we get. I think that is a great idea that we do a 7-year term and then have a conversation in the future, right? So when I see the client, I always do something like a budgeting with my client, right? So the budgeting is very simple, just to talk to them. I'm going to be doing like a presentation by myself, okay? So what I did is, let's say I have a client is okay, so okay, so what I did is I will talk to my client. Okay, how I'm going to make it bigger one. Just a sec. Okay, so like when I see my client, I just quickly go through it, right? I will ask them how much is the net income of that, right? So let's say they tell me that they have 2,000 per 2 weeks, then I will say, then you have 4,200, right, per month. And then I say, how much is the spouse? Oh, they have around the net. I'm trying if they are, let's say 3,000. Then I ask them, do you have any rental income? And let's say this guy is very good. They have a 3,000 net income, okay, rental income. So that is what. And how about the government benefit? Then the government benefit may be they have 200, okay, from the baby bonus and all that, right? So then I'll come to talk to them about their mortgage, right? Do you have a mortgage? Yes, Amy, I have a mortgage of let's say I have a mortgage of 800,000. Okay, so that is what their mortgage. How about the rental property? 600,000. So I will do that. So when I do that and land tax, how much is the land tax? Usually they have, let's say, it depends on where, they have at least, let's say $800. Okay, so I go through it, utilities, 400. So I go through it with the client, right? The auto, let's say they are renting 2 cars, $600 per thing. And then the gasoline, how much is the gasoline? Now it's more, oh yeah, now we have to do 300 instead of 200, right? And maintenance, they say, Amy, can you give me $100? So I do 100, right? And then telephone. So I ask them how much is the telephone. I go through the whole thing with them, right? So like the client will go through it, and then how much is the food? They say 1,000. So by the time I go through it, I know exactly, what am I? Oh, no, 800,000, sorry. 800,000 is how much is the monthly, then they will say that 2,000, okay, for example. Then this one is 1,500, okay? So you can see they have 10,000 income and the cash flow, they have 3,500 left behind. Maybe not. They say, oh, Amy, we have to go to restaurant. Okay, 1,000 restaurant bills, any other car, tuition, we get 500. And then we also go to trip. Okay, we get how much you want to go for a trip? 400 per month, okay, for the trip. Okay, do you put any money for your RSP? They say, yes. How much do you put in? They say, I put in $600 RSP, right? You can ask them, where is the RSP, where is the RESP? They have 2 kids, how much do you put for the kids? They say, I put $300 for the kids. So this person, after we do everything, because we don't have to look at the tax payable, sometimes if my client give me the gross, I'll do the tax payable for them. So for this client, they have around $700 left behind. And then you can see how much is the mortgage. They have 800,000 mortgage here, 800,000 mortgage. So the 600,000, and then you can already tell them that you have the liability of 1.4 million, right? But then of course they say, oh, my principal residence is 1.5 million. Okay, congratulations. And then they have 800,000 for my rental property, right? So you don't even have to look into other things. RSP, I don't have a lot of RSP. Maybe I have 60,000 RSP. So that is something that we look at that. Oh, congratulations. You have, like the client, they have 600, 800, 1.4. Real estate is 800,000. Okay, so you can tell the client, you look more than what you think. If you have a net worth of 960,000, but you have a liability of 1.4 million, right? And we can look at how we look at the term policy to take care of it, or we can see if you have any extra money, we can do some permanent insurance, and we can do the, like you can calculate their need. You know, when we do the need, we have 3 different ways to do the need analysis, right? And I will tell them what is the need. I don't have it here. Okay, the need, we have the debt to take care of the debt. We have another one to take care of the income need. You know, let's say they have an income of how much, then I can take care of the income need, you know. So this is what I do for my client, and then calculate how much need they have. They have a personal goal, you can talk to them. And at this time, at least you know the net cash flow. And then with the net cash flow, you can explain to them what is whole life, what is term, and see how much they can decide to put into it. But the most important thing is that just like Canada Life, they have the budgeting, right? Do the budgeting with them and see how it goes. And then fit in with the policy that you can think about. The term policy, I like the 7-year term with 7 year, with another 17 years. The client will love it, because then you create the dialogue and less money for them. There is only company that can do it is Canada Life, right? So because for the 10-year term, a lot of time we forgot to remind the client. But for the 7-year term, the good thing is the client will come back to you and ask you for renewal. So that is something that I want to explain to people. Remember to go to the Canada Life, they have budgeting, or do your own financial need analysis, look at the budgeting, look at the cash flow, and explain to them you can either cover your debt, or for the $700, I can create a whole life for you to do some retirement plan, right? So you can explain one whole life for them and see if they like it or not. Right. So is there any other question that I try to help to budgeting everything in, and then look at the different term that Lydia proposed, right? And I think if we have that type of idea with Lydia, and I think Canada Life is the best term policy that we ever had, so that is something that I want people to look into, okay? Yeah, any question for me? Let me see, we have some new chat. Okay, if you want. Okay, sorry.
Hi, Amy.
Yes, I'm here. So,
Hi.
okay, yes. Michael.
Oh, okay. I just want to echo back with the last week's presentation. I think the whole purpose here, Lydia trying to promote us, is to make sure when the client is young, they got enough insurability. They have a coverage. The balloon is big enough, so no matter what, the client can play around with it, and that would be a brilliant idea. Because again, when the client is young, they don't realize that their insurability is going weaker and weaker and weaker. And this is a great tool to enhance ourselves to do a better planning for the client. Thank you.
Yes, thank you for your comment. And I think today I don't want you to hold too long, so I make it very quick to tell you how I do the financial need analysis. And then after I do it, I will tell my client, you have 3 ways of covering yourself, because I have another a slide to explain to them 3 ways of calculating need. So we calculate together. Somehow I cannot find my, let me see if I have it here. No, I don't have it here. Maybe next time, financial need calculation. Yeah, so like we do the own calculation with the client, and then I also have another one, which is a very good one for whole life policy. I can show you if you want me to show you, which I showed before. Okay, a PPT. My client love it, and so this is a way of me to sell the whole life policy in a nutshell. Okay, so I always do something like this. It's for the corporation. Okay, so even for individual, you don't worry about it. It's the same, the individual, right? Only for the retirement income, even more, because we don't have to pay dividend tax. This one, the client is a corporation, so they have to pay the dividend tax. The good thing about that is I make it as a benefit to show them how much retirement income they can have. How much, if they have a corporation, this is the tax savings that they can get from the total death benefit at age 85. And then the family, after paying off the retirement income loan, they still have 300,000 left, right? So my client only pay 110,000, and they are able to get 300,000 retirement, 300,000 death benefit, as well as a capital dividend account, which is a tax benefit of 300,000. Okay, so this is something that I always use the basic coverage, I think about how to make it easier for them to understand and put it into a nutshell. Okay, so I hope that is something that people like. And if you have any question, please call me and give me some feedback, how we can do it. The idea for me, because everybody know how to do the financial need analysis, is you have to use it. Mind you, when you use it, you know exactly what the client situation. And then a lot of time my client will be very happy about that, is because, oh, I didn't know that I have so much net worth, especially the real estate is growing right now. So even their own house have a lot of value and people like it. At the same time, people will ask, should I still need the insurance? But of course, the more you worth, the higher the insurance you need to cover your debt and to cover your capital gain in the future, and also to give you a better retirement plan. Okay, so that is something that I always tell my client and analyze their need. After I do the financial need analysis, the cash flow and the net worth, I'm going to explain to them my way of doing the calculation of the need. I don't like to use other company way to say how much they need, because I have been using Canada Life and other software. When I plug in everything in, and they've told me that my client don't need any insurance, I will be stuck. Your computer told me that I don't need any insurance. So now I create my own software, and then I not create my own software. I talk to the client how to look at your need, either for the 10 to 15 times of your gross income, or you have a perpetual income replacement, or cover all the debt and the expenses for how many years. So 3 ways of looking at it. I have a I don't have it here with me, and I did Excel file on that. So my client have 3 ways of looking at that. I don't know where I put the Excel file. Okay, if I can find it, I can show it to you. No, not this one. Okay, I will show you. Okay, I'm going to show you next time if people are interested. But anyway, that is my way of making my client to look at the need. Okay, but if everyone, let's bear with me. Let me find out where is it. Okay. Can you come and show me where is the debt need analysis? I cannot find it. I have my help right now. Okay, just a sec. Okay, I'm working on that too now. Okay, so after I do the analysis, I'm working on another worksheet, and I'm going to have a lot of worksheet for myself, and then so in the future, that is something that you can you can create your own worksheet and work with the client and tell them the need and see if they agree with you. The most important thing is not the need, what they want. Even though they have $700, they may say, oh, Amy, I may want to buy another real estate, right? They want to have a lot of plan. You can talk to them when they come to their goal, right? And exactly, whether they have any money left behind for your retirement. You can ask them, are you planning for your retirement? Yes, I have my RSP, right? Then you have to explain to them, once you have a lot of RSP, which is a good thing, but at the end, you have to pay a lot of tax when you have not used up all your RSP. We have a RSP meltdown, they have other concepts to tell them that, right? But the most important thing right now, I can take care of your debt. At the same time, the earlier you do it, the better off you can have a retirement income from the whole life policy. Do you want me to show you? And then you want to ask them, do you want it to see it instead of showing them? Okay, so that is my idea. Okay, and any question for everybody? Okay, so if everything is good now, I hope I coordinate the team meeting. Sorry, I was some technical thing that is why I have to go back and double check where I can get all the full screen on my worksheet. And I hope if you have any, next time, every time what the speaker say, I'm trying to get something related to what the speaker, okay, presentation on the sales point of view. Okay, and I like Lydia a lot is because she is very client oriented. She always think from the client point of view, you know, and she gets all this on her own. You know, even last time the reduced pay up is something on their own. So she did last time the reduced pay up. Okay, I know that some people don't. Okay, I just want to show you. I like this. Not this one. Reduce pay up. Let me see if I have it. Okay. Okay, reduce pay up PPT. Here. Not this one. Okay, I have that. Okay, myself. Wait just a sec. I can do that for you. Okay. Okay. In the last slide, okay, I do the presentation for the reduced pay up again. So you can look at what I did. If people want to stay, that's fine. Okay, so you can see, you can use the cash value as an SS class. And then because they have some cash value guarantee and the guarantee they can reset it, tax shelter, and we can get the cash value leverage from the bank for 75 to 100% and tax-free capital dividend upon death. And you can see the whole life policy. I love this slide. It's because you can see the whole life is always increasing. You know, once you have the guarantee plus the dividend become the new floor of your vested guarantee. So you can see the guarantee is always increasing. You know, that's why the bank will give you 100%. Then you can see the retirement income, you know, like what is the benefit of the PAR. Then you have the retirement income and the tax, like I did that. Okay, and this is the thing I want to show you what here, what is Lydia said. She mentioned, if this is the first one, wealth achiever payable to 100. And after 20 years, they are going to reduce. Let's say I pay 100,000 for 10 years. So she suggests us to think about that wealth achiever for pay to 100. So for 100,000, you are able to get a guaranteed death benefit of 5.6 million. And the cash value after 10 years is 1.97. Okay, at that time, the guaranteed cash value is 2.2. Okay, that is how they reduce it at that time to reduce it to pay up. That means they don't need to use the dividend to pay up. But when they reduce it, then the total death benefit will be 3.111. They will use the guarantee plus the pay up addition. So it's 3.111. At that time, 10 years. And because the premium, we don't have to use the dividend to pay the premium, so the dividend will accumulate. So you can see the total cash value at 65 is 3.8, okay? And total death benefit at 88 is 6 million. But at the same time, you can see that if I use the wealth achiever payable to 100, okay? And I do the offset, you know, I do the ADO, more money there, okay, and do the offset. And look, maximum ADO, that means I put maximum additional deposit. So you can see the guaranteed death benefit at that time, I only have 1.9 million. The total cash value is 1.1, okay? And then when after 10 years, because this is continue to using the dividend to pay. So you can see that we are not reduced, right? So they are increasing slowly. However, you can see that for the first 10 years, the client have less coverage, a lot less. And then the third one is something like a lot of people do it, is a maximum 20 pay, also doing reduced pay up, but 20 pay. But that is no point because the coverage will be much lower than this one. At the same time, than the pay 101. At the same time, after 10 years, you have less death benefit in the wealth achiever 20 pay, reduced pay up, right? So you can see she color coded, you know, the best color is yellow. Then you can see, Amy, these have 3 yellow, right? However, this one is not guaranteed because the enhancement is 10-year enhancement. So I don't like this one, the 4th one. I'm not using it because even though they have a lot of yellow, but they are not guaranteed, right? And then the second one is the red. So you can see in here they have red, and the third is the green. The whole thing, all the different option. The third one is Wealth Achiever 20 pay offset, using offset, right? Estate Achiever. Then they have 10 pay. This is 20 pay, and this is 10 pay, and this one is Wealth Achiever with ADO, 10 pay with ADO, So that is a 10 pay with just a 10 pay. This one a 10 pay with ADO, and this one is 20 pay, but then with maximum ADO, okay? And this one is only an enhancement, right? So this one is a 20-year with a reduced payout. These two have reduced payout, but then recommendation is the first one, okay? And one thing some people talk to me about comparison Canada Life with other company. One thing is they have the highest guarantee value. So that is why they are getting one of the good thing when you do the reduced payout, okay? And we can talk about that. I think this is an excellent idea for this idea for the reduced payout. A lot of London Life people are doing this one, okay, for the time being. All right, okay, so hope that is a very quick idea, okay, but then that also tell you, analyze for you which option of the whole life is good. The T100 is good if you put a lot of money and buy a big amount. At the end, you can reduce it. Okay? Okay. So any question? Hopefully you like the team presentation. This is another review for some of the people. Okay? Some of our friends. This is another review. I look at that. I always do some analysis with that too. All right? I find out Lydia always have new idea for us, and then the term definitely is a great idea. Okay, yeah, thank you. Happy selling, okay, and happy March break. I know that a lot of people have March break right now. Okay, next week is March break. Okay, thank you. So see you there, and see you next week. Okay, bye. Okay, thank you.
Thank you, Amy.
Yeah, thank you very much. And any question, let me know and call me. Okay, bye-bye.